Today's episode is one that I've been really excited for because we're diving into a part of real estate that really a lot of people don't fully understand, but it can make or break your deal, and that's title. In this episode, we're going to break it down. What title work actually is in plain English, why title insurance matters more than most people realize, AI in real estate, and we even talk about FinCEN. So whether you're a first-time buyer, a seasoned investor, or a real estate professional, this is an episode you don't want to miss. If you're into real estate, buying or selling homes, or you just want a better understanding of what really happens behind the scenes of closing, this is the place for you. I'm joined by William Marx, General Manager at Title WRX Agency. William brings tons of experience and insight on how title actually works, where it can go wrong, and what buyers and sellers and even agents should be paying attention to. All right, William, why don't you join us?
Leslie, good to see you. Happy to be here.
Yes, I'm excited for today.
Me too. I've been looking forward to this.
Good. So what is exactly title? Can you explain to us what title means?
Absolutely. Great question, and I'm happy to answer it. It's a very foundational question. And to really explain what title is, I also want to back up a second and really frame properly what a real estate transaction is, because from where I sit at my desk, there's sometimes a different way that I look at these, where a real estate transaction, from my perspective, is you're buying the right to access a piece of land that a structure happens to sit upon. And along with that right to access is also the right to improve and the bundle of rights. So from where I sit, people fall in love with the home, the kitchen updates, the bathroom. And, what we fall in love with is, does that property have a clean chain of title? I think there's sometimes a lack of a depth of thought about the totality of a purchase.
Yes.
And what that is. And for me, for the title insurance piece, it's making sure that the person that you don't know that's purporting themselves to be the seller actually has that right.
Yeah, that's so good. And that's what you're doing. You're pulling that all apart to make sure, because there could be instances where with title, with estates, trusts, things like that. I actually had an instance where a client was purchasing a property. The daughter had their LOA for the estate. And actually the son ended up challenging it. So that deal fell through because on the front end, the title wasn't clean. So
that's a good way to dovetail into another point, where there is a distinction between what title insurance is and what title companies do. And to talk about the distinctions there, a title insurance policy is a product, and it's the culmination of our entire work product throughout the transaction. And what title companies do is, there's a couple different sections for that. One is we do the work that's required for us to be comfortable and compliant in issuing that policy, and then also processing the file and doing all the closing documents. And I would like to kind of dig into the details with you about the nuances between those two things and talk about what those are.
yeah, I think that'd be great.
So a title insurance policy it is an insurance product, and what's unique about a title insurance policy is it's a different niche than what people commonly think about for insurance.
Right.
Your homeowner's insurance, your auto insurance, those are insurance products that insure against future concerns and negative events that might happen in the future. And title insurance is unique in that we insure against events that have already transpired in the past, and insuring you against any potential future negative income from events that happened in the past.
Okay, so it's both proactive and reactive.
It's close. It's proactive in the sense that we are trying to clear up all those things before we issue the policy. And then it can be reactive if there was something that was missed or simply slipped under the veil of the processes that our industry has taken so long to create.
Yeah, so it's definitely something that is a need when you're going through this process.
It absolutely is. And there's, to talk about kind of some misconceptions that I hear a lot is people, you see a headline or like a gotcha headline about what the claim rate is of the title insurance industry, because it's very low percentage of properties that actually have a claim filed. And then it's an even lower percentage of those claims that are actually paid out on as a loss.
Okay.
And so people will read an article and kind of think, well, why am I paying, $3,000 for this when they never experience a loss? Like, that doesn't seem fair. And to go back to kind of what I was talking earlier, I think can be some more depth of thought into really understanding what goes into the policy issuance that can explain this for people in a way that makes sense.
So, how do you justify to a client the line item of title insurance on the closing costs?
Absolutely. So, great question. And to answer that, it depends on what clients we're talking about. So there's sellers and buyers, as we know. And I'll start to focus on sellers because in most Michigan purchase agreements, the seller is contractually agreeing to purchase an owner's policy that benefits the buyer.
Okay.
And so the seller is bearing the cost of this policy for the benefit of the buyer. And that's a critical nuance that sometimes is not always understood fully. So the sellers see this expense and sometimes wonder, why am I paying for this? And the reason is simple. It's to prove to the buyer that you have the legal right to sell this property, that you are who you say you are. You're willing to spend some money to prove that right and make a rational buyer comfortable with purchasing from you. Because more times than not, these are arm's length transactions where buyers and sellers do not know each other personally. So there's no trust established in the relationship. So the title policy is there to protect against that lack of trust.
Yeah, and I think that's something super important during the listing presentation to talk about because that's going to be a line item that's going to affect what they're walking away with dollar-wise. So being able to, as an agent, explain that is really helpful. And as an agent representing, I want to make sure when I do the listing, the paperwork, that title gets opened right away in case there's any issues, we can clear those up before it actually hits the market.
And this is something that you and I have talked about and something I give you a lot of props for. We've had conversations about that title policy section where you've noticed the expanded Eagle policy and asked questions about, does this carry more expense for your seller, which it does. And that section really gets missed by a lot of agents. They don't usually take that extra step. Whereas when working with you, that's something that you've seen right away. And that's a negotiating point and you can cross that out and say, no, my client's only going to pay for the basic policy.
Right. And, and I appreciate the partnership on that. Of course. Very good. All right. So more about that.
Yeah. So there are brokerages and associations, and that's typically where most people get their purchase agreements from.
Exactly. Yep. You pull it from the MLS, and that's your template that you're using.
Right. Bingo. And so in every purchase agreement, there's a title insurance section about who's paying for it, which is customarily the seller, even though can be negotiated.
Right.
And beyond that, it also discusses what type of policy is being purchased. And this is commonly just talked right past. I almost never see it negotiated. But depending on which brokerage is writing the purchase agreement, which is the buyer's agent, not fiduciary responsibility to your client, the seller, they a lot of times will default to an expanded or an equal policy, which adds a few $100s typically of cost to the seller's bottom line. It does make the property more attractive and give more protections to a buyer, which can be a selling point also. If they are wanting to negotiate on price, you could say, well, instead of that, we'll buy you the better policy.
Yeah. Well, that's awesome. Another something new I'm taking away from this conversation. So thanks for that.
And anytime you have a purchase agreement for your sellers, look at that section. If it's expanded Eagle, that's an opportunity for you to, I would prefer, of course, to sell the expanded Eagle policy, but that's an opportunity for you to save some money for your sellers at the closing costs.
That's great.
Yeah.
Thank you. So once a title order is placed, what happens on the back end?
A lot of things happen, and they have to happen at a certain cadence, at a certain time to keep the closing date in our purview and make sure we're not, the anchor being like, we need to extend.
Absolutely.
So I'll walk you through step by step. So let's say you're representing a buyer. They're relocating from another state. They're all excited. They're working with Leslie Martin because they've read her reviews. They know somebody who's personally worked with her and was like, you have to work with Leslie. And you and the buyers have finally found the home. They love the kitchen. They love the bathrooms. It's perfect. You get a really awesome purchase agreement that's beneficial to the buyers, agreed to. And you're buying them the expanded policy because and protect them.
That's right.
And you send the purchase agreement and the order over to the title company. From that point, my office, we quickly turn into defensive mode, protecting mode, to see, who signed this purchase agreement. Is it a natural person? Is it an entity? And if it's an entity, who on behalf of the entity? I see purchase agreements where they put the signature block as the entity name, so you don't know the name of who signed it.
Right.
And so quickly we start to filter, what do we need to do here? And while we're familiarizing ourselves with the purchase agreement, we send it off for search and exam. That search and exam process is critical and forms the basis of everything we do from that point forward. Through that search and exam process, the examiners will produce the title commitment, which is essentially our roadmap to clear this transaction for closing.
Okay.
That is where people think the lenders, they have all the underwriting requirements. Well, title has underwriting, and we have our requirements as well, and conditions to clear. And so in the search and exam process, every property that exists has a start of its recorded history. And what we need to do is find the recorded documents that go back as far as possible and explain in a logical sense the chain of title and events that have happened since that date. So it wasn't too long ago, this was all farmland.
Exactly.
And at some point it was developed and it was subdivided into a plat map. And now that parcel of land over there has a history that's 100 plus years old. And there are so many life events that can happen in a 100-year property history. Deaths, divorces, quit claim deeds back and forth. Maybe it was combined into the parcel next to it to make it a larger parcel. There's an innumerous amount of things that can happen. And so the search and exam process is about identifying what those are, were they done properly, and what needs to be done for us to be comfortable issuing a policy.
Okay. And how long does that process take?
Typically 2 to 5 days.
Okay.
Technology, especially AI, is helping speed that up tremendously, which we can get into.
Yeah.
But it's typically 2 to 5 days. And it's really also not something that you want to rush, typically. Within spec, right? If you get a cash offer, you want to close in 7 days. Like, it needs to be done efficiently.
Right.
But it's also not something you want done carelessly where details are missed, because the devil is in the details, and that's where claims happen. And nobody wants to deal with a claim event. The buyers and sellers don't want to deal with it. The title company doesn't want to deal with it. So it's a tricky balancing act that we have to strike between speed and efficiency, but also thoroughness, and making sure all parties are communicated with and understand why things are taking more time, or why did this transaction only take 2 days and this one's taking 14?
Yeah.
There's nuance.
Yeah. And I think because there's so many people involved, because some deals you'll have 2 title companies. If it's a cash deal, luckily it's one. But you want to make sure that everyone's talking, communicating, and a lot of checks and balances are happening during that process.
Absolutely.
So, no, that's a lot of due diligence.
And so the title commitment is the work product of the search and exam process. 2 to 5 days. And that tells us the laundry list of items that need to be taken care of before we can proceed to closing. And typically, as you know, it's a current mortgage and maybe an HOA status letter. As I know you also know, because we've had these transactions, there's also some uncommon but standard items like trusts and getting a certificate of trust, or having a probate letter of authority provided to us, telling the world who has the signing authority for this property.
Yeah.
And then there's some things that are uncommon. And I look at every closing like a puzzle. You have your standard cookie cutter ones, and those pieces are easy to put together, no problem. And then there's some that you've never seen before and you may never see again. And that's really where title companies shine or fade.
Yeah, and I think it's really important, the company that you're working with, that they're the subject matter experts. Like, I trust Title WRX because I know that you're going to be there doing your due diligence, the checks and balances. You do get questions where it's like, I don't know the answer, but I can trust you to provide guidance on a situation. And that happens all the time because you're right. We do get into these different transactions where it's not always just clean and smooth, and appreciate the partnership when it comes to, and when you think about estates, I mean, at the same time, families, you're selling a piece of property that was in their lives. It's emotional. Maybe, there's a lot of siblings. Not every deal is easy. We want them to be.
Most are.
Yeah.
Most are. And those are the ones where then when uncommon things happen, people are trying to fit like square pegs into round holes, and they're like, well, why isn't this one like that one? And I am a self-described title nerd. I would love to explain all the title tea to everybody that would listen.
Yeah.
And that's where I really enjoy getting out in front and talking to the clients directly. Because when I think about the agent title company relationship, it's a symbiotic one. And, you are the subject matter expert of finding these properties and getting, agreeable terms for your clients. And then it's my job to make sure that your clients are sending hundreds of thousands of dollars or millions of dollars to the right people and in the right way. And those things along the line, where I think the title insurance industry can improve is our service directly to the buyers and sellers of explaining things and properly diagnosing. This is a new married couple, and they're buying a home together for the first time. It's very different than somebody who's downsizing and it's their fifth transaction.
Exactly.
It's different than an investor that's doing a fix and flip. And so being able to switch gears and have the right cadence with the different types of parties is critical in the partner.
Yeah. And I think that is what's so great about the customer service because, I try to strive this like white glove concierge with clients and introducing them to vendors or partners that I believe have that same level is really important to me. So if I have a client that has questions, I don't have to worry about, oh, you know what, let's just talk to William. And they can talk to you directly.
Absolutely.
Like that's how it should be, where I shouldn't be the middle person because one, you're part of the team. So them reaching out to you if they have questions, that comfort level is what it is. Because it is like, it's a roller coaster of emotions. So
we all have to build trust in the transaction. And what title companies do not have is, months of showing homes together and all those things. So, and then if we're not talking to clients and all of a sudden it's the day of closing or the day before, hey, here are our wire instructions.
Yeah. Like, oh, can I trust this?
But send us $400,000. I'm William with Title WRX. This is the first time we're talking. Like that doesn't work. Yeah. So,
and now that I think of it, so what I do appreciate, and it's something that I've implemented recently, this first quarter, is once I go under contract, I send out this congrats on escrow email. And that email, it's going to have the buyers, the lender, title. It's going to have everyone who's going to be the moving pieces. So that way everyone acknowledges it. So like the last one I just did, I had Kevin from your office on this email. So that way my client recognizes who Kevin is because he's going to be handling that transaction. But it's putting, not just entities, but names to those entities. Absolutely. So that way the comfort's already there as soon as you're under contract. So I think that's something as partners we should be implementing more because the clients understand it.
Absolutely. And we love when that happens because then for us, the work starts when the purchase agreement comes to our office.
Yes.
And for a lot of people, I think that's mentally where they feel like the work has ended.
Yeah.
But there's still that last hump to get over, which is the contract period. And so doing that really nice warm handoff allows us to kind of take the baton and do the heavy lifting from there, and allow you to free you up to keep doing the revenue generating activities.
Exactly.
And looking out for the client in all the other ways. It's like we have the title piece handled, and allowing us to have discourse with them directly establishes more trust. So when we need to request documents like a divorce judgment, it's a very sensitive document. And so it's different than if Leslie has introduced us and they know we're a trusted party versus,
someone random, or like I just got this email. Should I respond to it? So that's why I implemented this new.
Perfect.
Congrats on escrow. That's when I go through my task list, it's part of my CRM checklist. So it's
Wonderful.
knowing that everybody talks, and the lender's on there, title's on there, and the clients. So all of those moving pieces.
So from the search and exam, we get the title commitment. We will work directly with the clients, buyers and sellers, and the lender if there's a lending party involved, to get all those requirements cleared up. And that can take 1 day, it can take 2 weeks. It depends on the participation of parties. How quickly are they responding? Are they on vacation? All those things. But at some point, all the conditions and requirements are met. And then title companies take up the mantle of crafting and aggregating all the closing documents. And so that's where it's a unique but separate hat we wear from the title policy issuer to then we're also the closing agent, which is the final bow on the entire experience they've had with you as the agent.
Right. Yeah. Yeah. And, in that time, we're dependent on the lender giving the clear close because we need that for the documents. You're drafting the documents, making sure all the numbers are lined up. So there's a lot of moving pieces even towards the end. And it's really important because that's where that attention to detail is really important.
It's critical. And, you could spend 8 months, they say it takes years to build trust and 5 minutes to ruin it.
Absolutely.
It's the same with a client experience. It takes months to build, and it can take one bad closing appointment to leave a bad taste in the mouth. And so your partner that's proactively communicating throughout the transaction, efficiently drafting documents and getting them out in an appropriate time where people can review them. It's a pet peeve of mine in the industry where you might get, we're clear to close. Let's close this tomorrow. And we all just expect the client to have enough time to review and digest these things that we're all very familiar with, but
Right.
They don't transact real estate every day. And I appreciate a responsible closing timeline where it's a mutual thing where notice is given, hey, we're looking to schedule on this date. And documents should be out, in my mind, about 2 days at least.
At least, yeah.
Before closing.
Yeah, because you want client to be able to review everything if they have questions and feel like they're just not rushing. It's more of like their hand being held. And that's important to me because it's the whole experience. I just finished a book, Unreasonable Hospitality.
Okay.
And it's based on more of like the restaurant.
I'm going to add that to my list.
Yeah, it's so good. It's really good. And it's based with restaurants, but it's definitely customer service, and it's about the experience, like the little moments, and like how can you elevate any moment for them to look back on, and like what can you implement, and it goes back to that white glove style. So yeah, it's a great read.
I'm definitely going to read that.
So let's talk about closing day. Let's kick it off with perspective of a cash buyer. What does closing day look like for them?
Yeah. Cash buyers, they have it easy, relatively speaking. Aside from the fact that they have to send large sums of money, that's probably the hardest part. Their document stack is very little. They don't have any notary documents typically, unless there's other things that would trigger that. But in most 99% of cash buyer closings, there's no notary needed, and they can simply DocuSign their closing package. If they're comfortable with that. Some people want to have the ceremony of coming in to sign, and then when it takes all of 5 minutes, they're like, that's it.
Yeah.
But yes, that is truly it. They have about 10 documents. Their biggest item to do is make sure their funds arrive safely.
Okay.
And so title companies, we do our best to give them fraud warnings, establish trust throughout the transaction, communicate our wire instructions securely. Ultimately, we can't fully protect somebody from being socially engineered and, taken by surprise or taken by a fraudster. And no title companies will ever accept closing funds from Venmo or Zelle. It's incredibly rare for wire instructions to ever change. So any kind of message where, hey, our wire instructions all of a sudden changed, that should be a red flag immediately.
Yeah.
And I always also recommend go in person to the bank if you can. There's all these online-only banking platforms, which are very convenient. But if you happen to bank with Chase or Bank of America or Huntington, one of the large institutions, I do recommend taking the time to go in person to send the wire. It's one more added layer of protection. They will typically be the ones inputting the information, so you don't have to worry so much about a fat finger typo error.
Right.
And then they also make sure, like, to help vet the instructions, they have added layers.
Okay. So that's good. Yeah. And a cash deal, most of my clients that have done it, they just do the DocuSign and then, we'll meet up for keys.
Yep.
So then let's talk about the buyers with lenders that are assuming a mortgage. What does closing day look like for them?
Closing day, I can talk about what closing day should look like.
Sure.
And then some common variations of where some tension can sometimes enter the chat.
Okay.
What it should look like is title and lender are both clear to close. We agree upon a closing date a few business days in the future. So there's proper time for the mutual processing between title and lender to play out and then resolve itself in a way that can then be communicated to the buyer and they have time to review documents and digest things. That's an ideal situation. When I work with you, when I work with Vince, that's what happens.
Yes.
What happens in some other transactions sometimes is, and this is sometimes the fault of the buyers or the lenders, but for whatever reason, sometimes the title company, we're not perfect. Sometimes we're the anchor, not Title WRX, but the title industry in general, sometimes things just come under the wire. Right. And that's the reality of the situation. So there's either the contract closing date is tomorrow and we just got clear to close, or we just got clear to close and there's a rate lock. For whatever reason, there's a need for a condensed closing period. And that's where the biggest customer service issue that pops up is if I'm a buyer who's not doing this frequently, you think, oh, we're clear to close. Boom. What do I owe? Where are my documents? Like, it should be instantaneous.
Right.
And maybe one day it will be with AI. Maybe that day is much closer. But currently, there's about 4 to 6 business hours of processing work that happens once a clear to close is issued.
Yeah. And I think it's important that the agent is coaching clients' expectations on the front end. So that way, when we do explain what a clear to close is and like it shouldn't be today or tomorrow, we really do want that buffer because we want to make sure that you have time, you have that protected time to get the documents together, and the buyer has protected time to be able to sit down, review if they have questions, which usually they do. Being able to walk through, not just show up at a table, sign,
and feel rushed.
Yes. Yeah. Like I want to avoid that because there's nothing worse than the tension, right? And if it's been a smooth deal, that's one thing. But sometimes, with negotiation, you've already had a couple bumps and now you're feeling rushed into signing documents you're not 100% knowledgeable about. I think that protected time is really important. So
absolutely, because in kind of the psychology of a real estate transaction, and specifically this is more unique typically to residential, these are usually emotional transactions. A lot of times they're positive emotions. We just got married. We just had kids. Yeah. We're a growing family. We just got a new promotion and we're moving to a new exciting city. But then there's also some anxiety that can come along with that. And also sometimes they're around negative life events like deaths and divorces and job loss. And residential real estate has a lot more emotions right beneath the surface that when you add a rushed layer on top of it, amplifies those.
Absolutely.
And it's really important for all parties, professional parties, to have their fingers on that pulse and understand what cadence this transaction should have.
Good. All right. So we talked about the buyers with lenders. Now switching to the other side, sellers. What are the expectations for the seller's closing day?
So on closing day for a seller, in an ideal scenario, they've already been in communication with the title company, and the title company that's working with the seller is in the driver's seat, because they are the ones that are drafting the bulk of the closing documents, even if there's another title company involved. So the seller's title company gets to control the speed at which the documents get generated. So if you work at a tech-forward title company like Title WRX,
Yeah.
it takes us usually anywhere from 1 to 3 hours to get those documents together, assuming we have no other closings to do.
Right.
But the seller's expectation should be that once it's scheduled, they should get those closing documents same day or early the following day in advance of closing, so they can look it over, verify their seller proceeds, look at the legalese clauses on the affidavits, and just verify the information. That's also time to allow for an attorney review with sophisticated clients that have counsel. One of the most stressful closing events is where there's attorney review and it's a protracted or contracted
Right.
minimal closing time frame window.
Yeah, that's a lot of eyes and checks balances. So it could add more time because of you got more people involved.
And, attorneys, their job is to protect their clients' best interests. And a lot of them are agnostic to the closing date. They would sooner extend that out and make sure that the documents are arranged properly for their client than rush through and just quickly redline things or pass them without giving them a thorough review.
Right. And you know what? You would expect that, though, that they are benefiting their clients. Like,
Absolutely.
you want to do their due diligence, not just rush through. So
Absolutely.
that's positive. So that's on the seller side. And then when it comes to any escrows that they have, what should they be expecting?
It depends on the type of escrow. So the most common one is water. And not to get too into the weeds, but it also depends on what municipality handles the water. But generally speaking, either the seller or sometimes their agent or sometimes a transaction coordinator or admin, somebody orders a final water read, supplies that to the title company, and we either pay that at closing and release the escrow, or we release that later in the future. If there's an occupancy escrow, that's handled upon key exchange, where we need both buyer and seller to sign a release directing us who gets what money. And there's also typically a damage or security deposit escrow along with that. And it is important to talk about the differences between occupancy and damage escrows, because I see those trying to get mixed very frequently, and it causes a lot of excited feelings sometimes.
Of course. Yeah. So there's definitely a difference between the occupancy and, you want to make sure that both parties are not confused about expectations. And I think that's when things come, especially if there is some damage during moving and, when buyers receive keys and the house doesn't look exactly like they did on,
It's not broom swept clean.
Exactly. And I think that's important on my side, is to ensure that communication with the other agent, how do things look? Because you really just want to make sure it's very stress-free.
Absolutely.
So, that's
one of the most common misunderstandings or misconceptions or misnegotiated items I see is that relationship between occupancy and damage or security deposit in that period of time, where I will see some agents for whatever reason, whether it was not agreed to or they thought they were negotiating one and the same, there's only occupancy on their purchase agreement. And it's usually the buyer's agent that is negotiating these terms, because the sellers need occupancy and then the buyers are dictating what terms their clients are willing to afford. A couple of years ago, it was free occupancy for 60 days because you had to be competitive. But now it's a little more, hey, like, this is a negotiating item. So there's a daily rate that typically drives the occupancy escrow formula of the amount that's held. And that is not ever to be able to be used as damage.
Okay, that's totally separate.
It's totally separate. Now you could alter the clauses to say like this amount is going to be held for occupancy and damage. It's not commonly done. I don't know if brokers would ever say that's a good idea. It's just if you're negotiating one, you should also have a damage deposit escrow.
Yeah. Well, that's great feedback, though. It really is. And I think as you move forward with transactions, these are things that you should have in your back pocket because you really want to benefit and protect your client. So,
and what happens commonly then is they've only negotiated the occupancy for whatever reason, and then the seller moves out and there's damage.
Yeah.
And so then they try to dip in to that because their buyer client then is kind of looking at them, why didn't you think about this?
Yeah.
What do you mean we can't use this $5,000 for this hole in the drywall? I want you to pay for it then.
Yeah. Oh, that's a real life situation.
It is.
So, no, that's good feedback. And I think even any agents watching should definitely think about looking at those two different scenarios.
Absolutely. Make them distinctly different and spelled out very specifically. And also a good title company, we read those clauses.
Oh, yeah.
And if there is ambiguity, the escrow officers should be reaching out for clarification.
Yeah.
And it happens more often than not because there's very little standardization in the additional comments or other remarks section.
Yeah.
Where what we see a lot is in the occupancy section, they'll cross out and they'll say, see section 39.
Right.
And then there's 3 or 4 sentences about who knows what sometimes being said. And, the agents know, and there's intent behind every clause there, but sometimes it's ambiguous as to how do we
interpret that. Yeah.
interpret and draft the documents.
Yeah. You guys must see lots of best practices, though, like where when documents are submitted, there must be things that you're like, wow, this is like tight. And this is how it should be. So maybe that's something next time we can talk about different best practices that you've seen, because that's really helpful.
Absolutely. I would love to do that segment with you.
Yeah. I think that would be good. Okay. So then next we can talk about AI in real estate.
Cool.
Definitely you've, in this conversation alone, talked about how Title WRX is leading with AI and understanding how resourceful it is. What are you seeing right now with AI in regards to real estate industry?
AI is wonderful. I'm a big fan. Who isn't? If you're not using AI today, I think you are definitely at risk of being left behind and being left behind very quickly by those that are. I think the adoption rate of AI is much quicker than what the internet adoption rate was back in the 1990s and the early 2000s. It's coming on much quicker, both in capability and in numbers of people using it. So in real estate in particular, and for title companies in particular, it's helping us a lot with our back-end processes right now. Because there are some things that need to be determined still, like how are you handling data privacy and security. There's some very undefined segments of AI, like when you're giving agents agentic AI access to silos of data, how is that governed? And so, at least for my title company in particular, we are researching ways to be comfortable with that. But where it's helping us right now and where it's deployed is in things such as order entry when we get a purchase agreement to parse through the terms and extract key names, dates, clauses, and give the processor a very nice summary of what's going on. And so it's at a few different stops along the way. There's safe, secure ways to leverage this technology to help the processing go quicker. So
Great.
That's why you're seeing quicker turn times in title search and exam now, where there's AI programs that will search through the records and, summarize a report and say, these are the things that were flagged. You really should focus on these items. And that helps the examiner tremendously.
Oh, I bet. I bet that that's something where it's not just you doing it manually, having a second set of eyes on top of what you're already doing is just more efficient and a little bit more secure. Where, so maybe they're not, I mean, us manually, it's what human error, right? That's what we say. And if you have an application that can help you, then it just makes it that much stronger.
It does. And I try to explain AI to people that it's like Google 2.0. Where when Google came around, it was an amazing resource. You could search anything and manually find and filter and parse the data. Now the AI programs will do that search parsing for you. You still have to read and interpret the data. And if you're not certain about the sources of the data, you should go through the links and, just like a academic research paper, verify the source data.
Right.
But they take that search and aggregation element out of it, and those are things that are helping the title insurance industry generate the title equipment much quicker.
Cool. And then, so do you guys have specific applications or software? Is this, when you are working with other title companies, can you tell if that's something that they're leveraging, or is it more like you're out on your own searching for resources?
Great question. Great question. So a lot of the processes for efficiency for title companies is our proprietary workflow. You can kind of tell the title companies that are more on the cutting edge based on how quickly they're communicating. If you're a frequent user of AI, you can tell if you've gotten an AI generated email with the M dash and the bolded letters. And I've come to actually enjoy now sometimes when I get these thoughtful AI emails from people. I'm like, it's well structured. It's very easy to read.
Yeah.
But you can tell in those aspects, but we don't usually share secrets of, we just got this great new thing that, made our escrow officers be able to process 30 files. Now they can do 60.
Wow. Okay. So yeah. So it really is like you going out and identifying. But that should be how it is, because you always want to level up. You want to make the experience even better, not just for the clients, but for your staff too.
Absolutely.
Right? Like that's really important how their workflow is. And if you can take some type of weight off their plates, then it makes their job easier.
Because at the end of the day, real estate in general, of which realtors have their part in it, title has their part in it, lenders have their part in it. It is and always will be a relationship-driven industry. And the AI term for that is human in the loop.
Yeah. Okay.
There will likely always be a human in the loop, at least for a much longer time period, I think, than some people are predicting. But it's about making those humans in the loop more efficient with their time and being able to do a higher volume of things.
Right. And I think, and that's just it. I was having a conversation with someone yesterday, and, my CRM is my Bible. Like I'm in there. I have everything set up for reminders and tasks that I need to do, because if I just relied on myself, things would fall through the crack.
Yeah.
But if I can put those things into my CRM to help me stay organized and push through, when I started this, it was more manually doing everything. And now you're seeing more things come out that can help, AI driven. They can go into your email and pull emails and file things for you. So there are perks to it.
Huge.
Yeah. All right. So the last thing that I want to discuss is on March 1st, a new regulatory law came out for FinCEN. And what is that? What is it about?
So it's about protecting American interests at the highest level. So the government and FinCEN in particular has identified that residential real estate, specifically residential real estate 1 to 4 unit residential real estate, has been used as a vessel for moving money around in unscrupulous ways. The term anti-money laundering is being thrown around. And that's exactly what it is. It's an offshoot of AML, which is anti-money laundering practices that banks have been subject to for a very long time. And so it's finally started to trickle down into the crevices of which residential real estate was one that was getting exploited for money to be moving around through, cartels, terrorist organizations, and just anti-American interests of foreign parties, but also just criminals domestically. So this regulation was introduced to help stem the flow of that,
Okay.
of which title companies are subject to reporting standards on behalf of the clients. And so that's where the impact is being felt is when you have a cash buyer that is a non-natural person, so an entity or a trust, they now have to fill out a reporting form on behalf of the title company, really giving them more information of who the beneficiaries are of this entity and where the source of funds are.
Okay.
And that's simply put, that's really all the regulation is. It's enhanced reporting standards. Title companies are not beholden to policing this data. It's self-reporting by the buyer. You know, they could put as the beneficiary Charlie Brown at 123 Main Street. You know, maybe the escrow officer would be like, really? And bring this to my attention. Like, this doesn't look right. But title companies are not required to police the data.
They just submit.
Correct.
Okay.
And so that goes to FinCEN. And, if FinCEN probably already has these people on a list somewhere and, something will flag in their system and they'll choose whether or not to investigate this person, an individual.
Is there a delay in because obviously cash deals we talked about are super short with the closing between 7 and 10 days. Is there a delay with closings that you should anticipate as a seller receiving these offers?
Only if the buyers are not participating in the steps of the transaction. If, for example, we have a cash transaction, you're representing the buyer, and we send them the link to fill out the report. If they just go on and do it, it's instantaneous.
Okay.
So the time is not long. It's just whether or not it's done.
Yeah. So it's just like another document. And as a buyer's agent, knowing if my client is cash or LLC trust, just preparing them on the front end, coaching them that this is the expectation.
Absolutely.
Good. All right. Well,
And right now, one other nuance about it is it also extends to if the buyers are getting a private loan. So, you could say it's not technically a cash transaction.
okay.
But really what the rule is about it's to enforce anti-money laundering standards. So if it's a private lender, like an individual giving a loan to somebody else, that is still subject to reporting.
Right.
The only time that it's not is if they're getting a mortgage from an institution that already has these AML practices in place, such as your Chase banks, your Bank of Americas, your Huntingtons, your institutional banks have these already in place.
Okay. Well, yeah. I mean, I guess there's really not much that's changing process-wise then.
Process-wise, no. It's an additional send out, form to fill. There's filing costs. So buyers can expect to see typically probably anywhere from $300 to $400 of additional closing costs.
Okay.
And that's really it. I know there's been a lot of noise around it, and I think it's almost kind of scared some people. Like, everybody feel like they're being investigated, and that's not it. It's just as plain and simple as if you got nothing to hide, you got nothing to worry about.
Yeah. More transparency.
Just fill out the form. And honestly, it's something that obviously there's not a lot of fandom of government regulations in general. This is one that I'm personally in favor of a lot because it's something that shines a light on an area of our society that I think needed it. And it doesn't add that much complexity. I've been pretty impressed with the implementation of it so far, and the hit rate of title companies holding up to the standard has been nice to see. So it was communicated well in advance. It was communicated very thoroughly, and it's actually very clear, was clearly communicated what was expected.
Great.
In my opinion.
Well, I really enjoyed our time together today.
Likewise.
I look forward to the next one. But for now, where can everyone find you?
So my company is Title WRX Agency. We are headquartered in Royal Oak. We serve all 83 counties in Michigan. We can close you anywhere in the continental U.S. by sending either an in-person notary to you or by leveraging an online notary platform where you can even close from your phone if you're on the beach in Florida. You just need a working two-way camera and microphone. So Title WRX Agency, my name is William Marx. I'm the general manager. You can find me on Instagram at xmarksthetitle_guy. Our website is www.titleworks.com, and that's Title WRX.
Well, thank you.
Thank you.